Hi, Chelsea Franklin, head of the Franklin Team Remax Alliance. I wanted to provide a 2019 year in review and a preview of what we probably can expect heading into 2020. A lot of the conversations in 2019 started to ease up towards the end of the year, but a big portion of what we were talking about in the real estate community is if we are going to see a bubble burst or a recession, much like we did in 2008. The answer is that it probably is unlikely, and it probably is unlikely for the near future, and that's because prices are continually on the rise. We saw an increase in prices, and our supply hasn't met the demand of the buyer. A new buyer that has helped expanded their share of the market in 2019 is the iBuyer. Now, an iBuyer consists of Redfin, Zillow, OfferPad, and Opendoor. And this type of buyer is something where sellers, their agents can take a property and generate an offer from one of these larger companies. Now, they held 3% of the market last year, which was an increase by 2% from 2018. So it's going to be interesting to see what they do since they're continually increasing. It's just a very easy concept, so that in itself has been very intriguing to a client, but we'll see what happens in this new year. The Federal Reserve is predicted to keep their interest rates really low still, and we hit the new market at 3.8% on average. And according to Redfin, with the uncertainty of our world economy, interest rates might increase to about 4.1%, but then we also might see a decrease to about 3.2% towards the end of the year. So let's keep tabs on that. FHA guidelines have also loosened up, and this is a push for millennials and first-time home buyers to get into the market. With this new buyer, the new millennial, the new first-time home buyer, the trend towards property types has shifted a little bit, and it's shrunk. So the baby boomers coveted sprawling suburban estate is no longer highly coveted as it once was. And millennials and first-time home buyers are wanting something more urban, and there's an emphasis on amenities. So we're seeing a lot of metro districts, HOAs provide neighborhood events, what type of restaurants are in the community, what is being built around these suburbs. It's a bigger lifestyle, and urban communities are being much more coveted than bigger homes. It's an election year. A new hashtag that you're probably going to see trending is Our Homes, Our Votes 2020. This is going to be a big topic amongst presidential candidates. So it's going to be interesting to see what happens on that front, because the push is for more affordable homes. Home prices just keep increasing. From 2017 to 2018 in the state of Colorado, we saw an 8% increase in home prices. The average sales price in 2018 was $460,000, and then from 18 to 19, that increase was 3.3%, and the average sales price of $475,000. And this is all encompassing within the Colorado MLS system, RE Colorado. So for each neighborhood, you're going to see different pockets do different things. But increase decreased by 5%, but at 3.3% appreciation. We're still seeing it be very much a seller's market. Along with the increase in the lack of affordable homes in the entry-level market, we're seeing renters start to stay renters for longer. In 2019, according to Zillow, $512 billion was spent in rent. And according to Zumper, which is a rental real estate website, 32% of those surveys don't even believe that homeownership is the dream anymore. So, and that's just because entry-level homes have gotten so expensive, which is one of the topics that we're going to see presidential candidates address in this election year. But 10% of those affordable homes, there was a decrease in inventory, and that home roughly is floating around $250,000. So along with renters staying renters for longer, we're just seeing people extend out their leases and just not shop for homes. There's also a construction shortage. So along with the supply and demand, we're not able to build homes quick enough. which is why renters are staying renters for longer. But of the areas that are starting to grow a lot more, especially within Colorado, it's Colorado Springs and Fort Collins. And these metro areas, according to the National Association of Realtors, are up and coming because of domestic migration, affordable housing, and job growth. So we're seeing people not so much look within the Denver metro due to affordability and job growth, but they're heading north and south. The luxury market is expected to hold. True Pacific made a statement that in uncertain times, people usually start to decrease their debt and then focus on their primary residence. So where we might see luxury homes suffer a little bit is within the vacation market. So Cabo, Napa Valley, the Hamptons. It will remain discretionary, but like parts of Summit Valley as well. But for those who are keeping their luxury home as their primary residence, we're probably going to just see the natural days on markets for those bigger homes. So areas like Cherry Creek, where those aren't necessarily vacation homes, they're primary residence, those average days on markets are probably going to stay about the same in 2020. But real estate in a whole, it's always been a firm ground to stand on. It's an excellent investment, whether you are a renter or an investor. And especially with rates being really low, I think we're going to see more investors taking over the market as prices continue to increase in 2020. But that's the predictions for 2020. Thank you so much for taking the time to watch this video. Chelsea Franklin, head of the Franklin team. I have the best team in the world. So if you're looking to buy, sell, invest, vacation rentals, Airbnbs, flip homes, we do it all. So we look forward to talking with you, and thank you so much.